Welcome back. You're watching IndianOpen right here on BloombergQuint Live. Let's take a quick look across Asia. SGX at this point is faring pretty okay for itself, and the rest of the Asian screen also looks in fine fettle. So we've got about just 0.1% in China. Hong Kong has gained about 0.5%, and Nikkei is doing even better, 165 points higher. 12,000 has been crossed on the SGX Nifty. We're approaching 12,100 now, so it's a 52-point bump up after yesterday's second half move, which was relatively stronger even for our markets. We picked up pace at a decent clip, and you saw that the rest of Europe was still down under.
And we still did well, yeah.
We still did okay for ourselves.
Let's see if Asia is doing faring well today. Do we end the 4-day losing streak or not today?
Yeah, that's important to see. But aside from that, also it's getting a little more stock specific, probably not so much so on the index. But again, the banks and those larger banks continue to weigh in on the direction of the index. It's important to take a look at what's been happening in the derivative space. Navneet is joining us with more details on that. Navneet, good morning.
Good morning to both of you. Well, we definitely recovered from the lower levels. Index reached the mark of 11,900. In fact, we also breached 100 DMA on Nifty of about 11,940. But the closing came above that. As of now, Nifty has been trading below its 20 and 50 DMA. We've not seen any much of fresh shorting coming by, be it on Nifty futures or, for that matter, Nifty Bank futures. As you can see, open interest was down about 1%. For Nifty Bank as well, open interest was down about nearly 2% in trade, and the premium came off to almost 18 points. If you look at the PCR, that came off on account of higher call riding, which was seen in the system. So it was at 1.1 versus previous closing of about 1.14. Today is the penultimate day for the weekly expiry. In terms of distribution, the base has, I guess, come lower by almost 100 points. In terms of maximum open interest now on the put side, it is at the 11,900 put, while on the call side, it is the 12,200 strike. So that's the range we should be watching out for. But in yesterday's session, as I mentioned, there was more call riding, which was visible. So 12,000 call did see some bit of addition. In fact, put writers ran for cover, which was not a great sign. Let's see. SGX Nifty is suggesting an opening will be above that mark, but 11,900 and 800 put strikes definitely saw riding in trade. In terms of individual stock futures, there were a lot of stocks which were in focus yesterday. We did see some long positions coming up for something like Max Financial, which was up in a weak market like yesterday. BPCL also had a great session, so fresh long positions were seen there as well. LIC Housing Finance has been in focus. Shorting was seen on the futures side, and Yes Bank, which comes out of Nifty with effect from March 27, but it's back into the ban with effect from today's trading session once again, and there was fresh shorting seen in this counter. For FI data, they sold into the cash segment, and there are signs of more shorting seen even in the futures and options space. On index futures, there were more short contracts added. The ratio is still in favor of shorts, 20 and 80%. Even if you look at the index options data, they bought a lot of put contracts. 18,000 contracts were added, while on the call short side, also they added about 4,500 contracts. With that, it's back to you guys.
All right, Navneet, thanks very much for that. Siddhartha Khemka, Vice President and Head of Research at Motilal Oswal. He's joining us right now on the show. Siddhartha, thanks very much for taking out the time. Let's talk about the big news on the index, and that's the rejig that's happening. Yes Bank moving out, a little delayed of sorts, but it is finally moving out, and then replacing it is Shree Cement. The stock has obviously been, a big gainer within the metals pack. It's one of the top movers, in the cement pack. Do you feel that, this probably gives some sort of a balance to the weightage that you're getting from this particular sector on the index?
Yeah, very good morning, Devina, and to all the viewers. So this, as you have rightly said, the exclusion of Yes Bank in some sorts was delayed, and it was more or less on expected lines. Now, having said that, inclusion from one of the core sectors or industries of cement, that definitely gives a much more fine balance to the Nifty, where we had seen the sharp increase or rise of the weightage of financials over the past few years. If you look at what we have been looking at in the last say 6 months to a year, we have been looking at some of these core industries, be it a capital goods, cement, infra space, where we believe the things are looking better. Although on ground it is yet to take place, the economy is still not out of the woods, but any recovery in the economy plus the spending from the government and any pickup in the private capex cycle definitely augurs well for these core sector. And unlike you see a lot of other sectors, cement has been a consistent performer in India. They have delivered the kind of volume growth, a CAGR of almost 8-9% over the last 10 years, and that is something that has supported these stocks of the cement sector per se. So definitely adds more balance to the Nifty weightage.
Yes, indeed, and what a return for Shree Cement of sorts. It's always been talked about as a company that could be that is less liquid, but it's finally making its way into the big index. Let's hope the Nifty curse doesn't hit it. Siddhartha, the question is what happens to Yes Bank? Therefore, there is lots beyond getting out of the Nifty that might hurt the stock. But you guys, if not in active fundamental coverage, what is the flow situation at your brokerage with regards to Yes Bank?
Yeah, Neeraj, so definitely not the sorts of company you can cover fundamentally when it is more news driven or developments which even the company management is unable to give a direction on. So the biggest overhang is the fundraise, which has been now dragged for last 3 months. We have been hearing the CEO coming again and again saying that there are serious bidders and they are looking at the fundraise, closing of the fundraise very soon, but that has not yet happened. The exclusion for Nifty will definitely lead to some kind of outflows from the funds which are tracking the index, which were stuck because the Nifty index was not changed. From our retail desk perspective, we have not seen much of investors' interest in the recent past. A lot is more trading, or you can say speculative nature, which generally comes in with such kind of stocks. Even if you see the kind of other stocks like DHFL or India Bulls, where you get a lot of news flows and you get sharp movement either ways. So that attracts a lot of speculative interest, and that is where we have seen from an investment perspective or from a fundamental perspective, we have been advising to stay away from the counter until the clarity on the fundraise emerges and we get more clarity on how things would pan out from there.
Okay. That's on Yes Bank. We'll talk about a whole host of other names, including Reliance and the latest update on the movement of the Aramco deal. We had that on First Word, but we'll get in Siddharth's views as well. But Siddharth, just hold on. We'll also take a slight detour, get in a sense of what the other stocks in news have been yesterday that came up post-market hours, as well as a report put out by Citi on Indian utilities. What's that all about? But Nikki, first off to you on some stocks in news.
Sure, a couple of them actually. Jet Airways first, where the lenders have extended the deadline after a new interest which has been envisaged by one of the development fund coming in from Russia. Now the deadline is March 10, and it's a team from Far East Asia Development Fund along with Enso Group, which is envisaged interest in Jet Airways. This one is a PTI one. We're also looking at IT company updates out here. First one is HCL Technologies, which is going to be launching in Global Delivery Center in Connecticut, US, with an anchor client, Stanley Black & Decker. Also, we're looking at Infosys, which has said that it's going to be now partnering with GE Appliance for a digital solution, which will essentially lead to better operations for company. Downgrade coming in for GE and TD India. Now that's ICRA has downgraded the rating on this counter and has downgraded the long-term rating. Along with that, it has also gone ahead and revised the outlook from to negative, because the reason that it's stated is decline in revenue, profitability, and increase in working capital. The last on the list we have Bal Trishna Industries, where HDFC mutual fund, mutual fund has decreased the stake from 8.5% to roughly around 6%. Overall, if you look at the mutual fund shareholding pattern for December ended, that's actually increased by 1.5% and stands at 17.5% for December as compared to September 2019.
All right, and Agam, what's Citi's note on Indian utilities? I think they've talked about stabilization in power demand.
Yes, well, they're turning slightly positive towards the Indian electric utilities. Citi has seen some signs of stability in the power demand going forward. They're expecting a demand to rise further, considering it has already seen an uptick of around 3.5% in the month of January on a year-on-year basis. Moving on, incremental receivables build-up has slowed down, which means there will be less receivables going forward. Merchant prices have bottomed out, and domestic coal supply situation has been reasonably comfortable. And taking all these factors into consideration is the reason why Citi for now is looking favorably at Indian utilities right now.
All right, guys, thanks very much for that. So watch out for all of those names. Siddhartha, just want to come to you on, whether or not Reliance Industries within the pack, be it a telecom play, be it an oil and gas play right now, and a deal with Aramco if it goes through, is a good bet at the current prices, because that's definitely been, in turbulent waters since some time now, post its results.
Yeah, Devina, so we have been positive on Reliance for some time now, especially after the company gave the roadmap of the deleveraging and the roadmap towards becoming net debt free. If you look at, there are some of these deals which need to go through for the company to become net debt over the next 2 years, and the stake sale in the core business, the oil and gas business to Saudi Aramco is one of the biggest. Then you have the stake sale to BP in the the fuel retailing business, and then you have the other telecom as well as the technology platform company that they are forming. So overall, the news flows which came in earlier were that the deal is not going through, and there could be some issues with the government looking at selling its stake in BPCL first, and maybe those kind of news flows led to some correction in the stock. But going by the today's news that the talks are now on, and if this deal goes through, then that is definitely positive. Having said that, the correction is definitely worth looking at, given that Reliance had run up, and we believe that bearing the core business where the numbers are going to recover on a gradual basis, the numbers for the retail business which we saw in the December quarter were very robust, and for the telecom business, which did take some hit in the December quarter, but looking at the price hikes that the industry has taken, and the lowest impact from the current turmoil in the telecom sector, we believe Jio is best placed to benefit during the course of this year. So overall, we continue to maintain a positive view on Reliance. We have a target price of about 1800, so that's a decent upside. If someone has a 1 year horizon, definitely should look at Reliance at these levels.
Okay. Stay on, Siddharth. So much more to talk about, but time to get in our technical and derivative experts on board. Abhijit Phatak, Director at Definite Solutions, joining us on the show, as is Shrikant Chouhan, Senior Vice President for Technical Research at Kotak Securities. Gentlemen, both of you, good morning. Thanks so much for joining in. Shrikant, if you looking at the bounce that we are likely to see on open today, would you use that to create any fresh positions on the benchmark indices?
See, if the markets are really going to open up with a gap of 50-60 points, then it is better to stay away, because the markets are still into that recovery mode or rebound mode. So in case if we see any decline during the day, close to 12,000 or 12,010, then there we should look for adding long positions, because most of the time whenever there is a pullback or retracement in the market, we see some correction during the day, and that in that correction, if we create any long position, then that actually rewards to traders. So the strategy should be to look for adding long positions. One thing is very clear, because it's a pullback, it's a higher bottom sort of formation, but at the same time it is heading towards the levels of 12,000, 12,150, 12,150, 12,100, where the market has spent a lot of time when the market was above the level of 12,100 level. So there, we are expecting major resistance for the market, and that is why the strategy should be to look for adding positions on decline.
Abhijit, good morning. Would you shy away from taking positions as well? And if so, what are the levels which would be critical for initiating a trade?
Yeah, good morning, Neeraj. Yes, actually yesterday's low was a good place to bottom out for the index, but again above 12,080, 85 on the futures, there is a big resistance near 12,115 and 120. And I doubt whether that will be crossed in the first half an hour, so it will be better to wait for a pullback maybe towards 12,020, 30, and then initiate long positions. If anyone has long from yesterday, then maybe partial booking at open, because 12,120 on the futures is unlikely to be crossed in a hurry.
Okay. Time to get some stock ideas as well. Abhijit, what would the ideas be from a short-term perspective?
Yeah, I have both longs, and one of them is a continuation buy in the sense it has shown good strength even in a weak market in the last few days. Apollo Hospital, which is buy here or above 1780, stop loss will be 1760, and I expect it to go towards 1810, 1840. And another long is something which a stock which has corrected quite a lot from its recent top, but it is a very good support near 420, Tata Steel. So any dip can be used to buy with a stop loss of 415, and I expect it to go towards 445, 450 in the next few days.
Okay, Shrikant, your stock ideas?
We are going to bet on those stocks which are really like having very high beta in this type of market, and we are going to select stocks from the banks as well as from the metal space, because there we are seeing a lot of selling and a lot of short selling happen when the market was down. We like Axis Bank, which is currently trading around 735, 736. There we feel that the stock has formed reversal formation. At the same time, the broader pattern is clearly indicating us that it is going to complete its corrective pattern and is going to enter into impulse trending mode. So from current level, it's a best buy with a stop loss at 725. We can again expect 755, 760 on the high side. But if there is a medium to long term view, then I think the stock is even can go to the levels of 800 plus. We also like Jindal Steel and Power from the metal space, and whenever there is activity or rally in the market, we see very sharp bounce back from JSPL. It's a buy at these price with a stop loss at 183. We can see the levels of 192, 193 during the day.
Okay. Two stocks, LIC Housing Finance and IDBI Bank, both heads have denied any merger, but the stocks continue to remain, the overhang continues to remain in terms of RBI compliance. It's going to be a tough road ahead, even if they have to go and look at a merger. But last 2 days, actually, LIC Housing Finance and the kind of dip the stock has seen. Siddhartha, Khemka, what is your take on both LIC Housing Finance as well as IDBI Bank?
So, Devina, we don't cover IDBI Bank, but LIC Housing Finance is something that we cover, and we had a positive view, mainly on back of the attractive valuation that it had come down to. Now, this news is definitely a big overhang. While there has been clarification from both the LIC Housing Finance management as well as from the LIC itself that there is no talks of merger between these two, there definitely is some talk somewhere, and that has led to this news. So I think this until this clarity emerges on this topic, there would be an overhang on the stock. Having said that, there are definitely a lot of challenges with regards to merger of these two, because they're not alike in terms of businesses. They would need RBI's approval, a lot of other regulatory approvals, and there is no synergy between the two. So at least we don't think there could be a merger. But again, as I said, because of this news flows, the LIC Housing, which is a decently doing stock compared to IDBI, which has a huge NPA issues and as well as growth issues and challenges. If a merger of these two stocks were to happen, it will be a big overhang on LIC.
In fact, it's down, LIC Housing Finance, to 250 points from its recent high. And the kind of move that even IDBI Bank has seen, it's just been belt destruction. But onto a special segment, Bloomberg Edge, where Yash Upadhyay tells us about a pattern that the Bloomberg terminal has thrown up on a particular stock each day. Yash, good morning. What's the stock today?
Morning, Devina. So we're looking at Praj Industries, and the fear and greed indicator suggests that from these current levels, we could see a sharp reversal in the stock. But as we always do, let's first try and understand what the fear and greed indicator is and how do you interpret it. The fear and greed indicator is a Bloomberg proprietary function, and it measures the spread between the two weighted averages of the true range, and it oscillates on a zero basis line. So any reading above the mark of 0 would make the fear and greed indicator change its color from red to green, and when it is in negative, the fear and greed indicator will change its color from green to red. Now, coming back to the price chart of Praj Industries, and while we've seen that the fear and greed indicator after a series of red bars has given a positive signal, which is the green bar that we are seeing now after the big move that came in yesterday's day of trade. Now, on the looks of it, it might have just been another day of just 2% gains, but remember the stock had slipped as much as 3.5% intraday yesterday, and from the lows of the day, it managed to recover and end with gains of closer to around 2%, indicating strong hands entering at lower levels. And what are these lower levels? At well, around the mark of 99.5 to 101, there is a strong support for the counter. So we've seen historically that around these levels, thrice that the stock has managed to come down at the mark of around 100 or 101. It has taken support and has bounced up. The fear and greed indicator 2 out of these 3 times has given a positive signal when the stock has come down to these marks, and we've seen a big enough jump going as high as 120. So the current levels, the risk to reward ratio also looks extremely favorable, and the fear and greed indicator suggests that one could look to go long now.
Okay, and I'm guessing this has worked well for Praj in the past?
Absolutely, Neeraj. 5 out of the last 8 times, and this being the 8th occasion when the fear and greed indicator has given a positive signal. The average 1-month returns on a closing basis have been around 8.5%.
Okay, thanks so much for that, Yash. So watch out for Praj Industries as well in the session today. Now, yesterday, I was looking at a list of stocks which hit fresh highs in trade yesterday. There was Deepak Nitrite, there was Abbott, there was ICICI Securities and Apollo Hospitals. Companies around this pharmaceutical and healthcare space seem to be doing really well for themselves. 3 or 4 names very quickly, and Shrikant, if you have views on any of these. Abbott India, big moves. Apollo Hospitals, very strong moves. And a volatile stock, Wokhard, if you have a view there.
See, for Abbott and for Apollo Hospital, they are into strong momentum and they are heading higher, so that is very clear. I think Apollo Hospital is heading for the levels of at least 2000, 2015 next few weeks or months, so it will take time, but it is trending upward on monthly as well as on quarterly charts. So it's a buy at this price. Abbott is completely altogether different because here also we have seen a massive performance. It is currently trading around 15,000 level, but still from here the stock can go to the levels of at least 17,500 or 18,000 because the volume indicator as well as delivery based volume is clearly indicating us that the stock is again going into strong hands. But for Wokhard, I think the stock has again corrected to its decent levels of 320, 330, and yesterday when it was around those levels, it recovered back towards the end. So currently the pharma sector is not doing well, but if we see any again specific activity in the pharma sector, then we certainly we can expect activity in Wokhard Pharma also.
Okay. Siddhartha, Khemka, it's a slightly light day on terms of news. What is the most actively discussed stock in the morning meeting today?
Yeah, Neeraj, so coincidentally we were discussing the cement sector per se in the morning meeting. Our channel check suggests that the cement prices in the calendar year 2020 has risen continuously, and even now they have gone up. So our channel check suggests that overall the cement prices are up 4% in this quarter, that is the Jan, Feb, March quarter on a sequential basis so far. And if you see, the prices are up by about 6% in East, 5% in North, 4% in Central, 3% in West, and as well as in the South, there has been a big jump in these cement prices. So coupled with this rise in cement prices and the cost which have come down, we believe that the profitability of cement companies for the March quarter will go up and will improve, and hence we expect the performance from the cement sector to continue. We prefer players with exposure to the North, West and Central region, and hence Ultratech is our topic in the large cap space there, and JK Cement in the mid cap space. We also like ACC, which is a kind of a value pick for us in the cement space.
Okay. 40 seconds left to go, gentlemen. Just stay on with us. We're going to be tracking what's happening with regards to the pre-open session. It's going to be important to watch out for, considering that we've got a positive start charted for us. At least the SGX Nifty is pointing towards that. So another 0.5% for the SGX Nifty on a strong footing, 12,082 right now. Rest of Asia too looking supportive. China, Hong Kong, as well as Japan, all of them doing okay for themselves. Interesting to see what happens with regards to Reliance Industries and what it does today, now that we've got some news and some developments with regards to deal with Aramco. That's the big one from the index, and also Shree Cement and Yes Bank on the rejig on the index. Nifty 50 opens flat to marginally negative, while the Sensex is also pretty volatile right now, so about 0.5% higher for the Sensex. Individual stocks then to monitor this morning. First up, let's take a look at what the likes of Shree Cement, which is not yet in the index obviously, but what that stock's doing right now. It's up 7%, 25,498. I think this has crossed its the recent high was I think 25,355. This is at 26,000 already now, 9% higher on its inclusion on the index. Remember, it's not a very heavily owned stock, it's not a very liquid stock, and therefore the pricing move will be much more amplified on a stock like this. So 26,100 in pre-open for Shree Cement. Yes Bank, on the other hand, just pull that stock up and we'll see what that one's doing too. It's down about 0.5%, but anyways, I don't think this particular news is going to impact it too much. There's a whole host of other issues that it has to deal with, and the reaction of that is more pronounced. Coming down to the other movers, HUL is down 1.5%, HDFC Limited is down closer to 1%, Reliance Industries is down 0.5%, Yes Bank and Tech Mahindra looking weak. Amongst the gainers after yesterday's thrashing, Bharti Infratel seems to be doing okay. That's up about 3% UPL is up 2%. Tata Steel, M&M is at 532. IOC, Hero MotoCorp, HCL Tech continues to do well. Nestle India, you've got L&T, which is at 1300, and Maruti Suzuki at 6850 now, doing okay. More gains than losses. I think just about 4 stocks losing out in the session.
Okay, not too many others. There are 3 or 4 names that would have been included or otherwise on the other indices, and that is something that you got to keep in mind. So the inclusions or the exclusions on the Nifty 100 and the Nifty Next 50 could well be interesting. The likes of IRCTC, Polycab, etc., all of which get included. Atul Limited, which gets included in the consumers index, and the MNC index has some mention too. So maybe those stocks would be active, and watch out for the gold finance companies simply because of the fact that gold prices are edging higher and higher. So that's something that you've got to monitor in the session today as well. Just watch out for Vodafone Idea too. The initial rates show an uptick, but that may be short-lived, so we don't quite know. But watch out for this name in the session. Lastly, the entire Network 18 group, Network 18, TV 18, Hathway, and then the most active stocks in trade yesterday. Network 18 up 5% today as well, and that should augur well for all of these names. So TV 18, Hathway, as well as DEN should all benefit from this. Remember, now that the arbitrage is exhausted, they will move in tandem with Network 18, and Network 18 might just benefit because of the holding company discount going away. But before we move any further, let's get in Shefali Maliku Johnson with the brokerage calls of the day. Shefali, what is that brokerages are saying today?
Well, the one that I've picked up for today is Morgan Stanley's call on LIC Housing Finance, and it has been in focus on news reports of merger with IDBI Bank. And even though LIC Housing Finance, IDBI Bank and LIC all have denied such plans, but the market does not seem to believe so at this point in time. So that's what Morgan Stanley is saying. And they're saying that the lack of compliance with RBI norms will continue to remain an overhang on them, and the merger would not be an easy process to execute either. So they've lowered the target price from 440 earlier to 400 now, but as of now they're maintaining their equal weight rating on cheaper valuations, and they think that merger is not going to be a straightforward conclusion because of a couple of factors. One, they think that LIC Housing Finance has a meaningful minority ownership, so for the merger process to go through, to get the majority of the votes in favor, that will be one, and also the creditors, including the LIC Housing Finance bondholders, to get their approval as well is going to be a task. Second, merger to affect the profitability once, if at all, the two are merged, mainly on a couple of requirements: higher liquidity reserves, priority sector lending requirements, and the LCR, that is a loan coverage ratio norms. To meet all of these, the capital requirements would be pretty high, so that would weigh down on the overall profitability of the merged entity. And lastly, home loans of longer tenor would be 53% of the combined book, which in turn would lead to asset liability mismatch issues. So because of all these reasons, merger is not going to be an easy one. So we look forward to how this pans out. It's going to be a developing news and the process going forward.
All right, Shefali, thanks very much for that. So we'll keep an eye on all of those stocks, LIC Housing Finance and IDBI Bank. But, we've spoken about equities as an asset class. It's also important to see what's been happening to the demand for safer haven assets such as gold, which have been seeing the gold prices have been surging. Prices in India too are trading near record high levels. Let's discuss the road ahead of the yellow metal with Kishore Narne of Motilal Oswal Financial Services. Remember, the yellow metal, on the London's on the LME has crossed $1,600 per troy ounce. So you've got $1,602 per troy ounce now. International gold prices, domestic gold prices also surging beyond 42,000 per 10 grams of gold. Kishore, thanks very much for taking out the time. Obviously, last year was a good year for gold, and this year it seems to have got that little bit of a fillip or shot in the arm because of the panic around coronavirus and people starting to search for safer haven investments. What's your take on the future trajectory of the gold prices?
Yeah, hi, good morning. I think what we are thinking is, till now we have never discounted coronavirus as part of our outlook for gold. So basically we were basing our outlook on easier monetary policy and slower growth across the world, which would be driving some investments into gold. And we started a couple of years ago with 1630, 1640 as a target. But we recently, post-coronavirus, we actually revised our targets to around 1730, 1740 in dollar terms. And there is a little bit of added advantage for domestic investors, as we have seen a 2.5% duty hike by Government of India, which actually given a little bit of windfall gains for domestic investors. So taking it away from there, I think at this point of time, the basis or hypothesis for a rally in gold continuation is that basically to fight the coronavirus impact on the economy towards the second quarter of calendar year 2020, I think most of the central banks, the Chinese have already started, they have infused $250 billion of liquidity in the system. I think Japan will be following it very soon. UK, post-Brexit, will be pushing some more liquidity into the markets. We are expecting a much faster cuts on the interest rates rather than they were a little bit slower earlier. I think the central banks will now be in a little bit of hurry to cut the rates and also print more money than what it is needed by the economy, I think, right, to cover up the coronavirus.
So, Kishore, keeping all of this into perspective, on Indian prices, what are the immediate levels that you would watch out for? Not really the long term, but the short term.
Short term, yes, I think 42,500 could be on the cards, because that's where a major amount of resistance could come technically. But I think if you're looking at 6 months to 7 months perspective, probably 45,000 is on the cards.
Wow. Okay. Well, thanks so much for that, Kishore. Thanks for joining in on this quick notice and giving us your perspective. Appreciate your time. There's a bit of a wealth effect associated with gold prices moving up. You've got to keep that at the back of your mind. Abhijit, Phatak, some related stocks out here typically tend to react when gold prices move up. If you track either a Titan or a Manappuram and a Muthoot Finance in particular, Muthoot Finance had a splendid run the last few days.
Yeah, I tracked Titan, and Titan is definitely looking bullish. In fact, when it broke out above 1250, it became bullish, and I wouldn't be surprised if it goes towards 1380 or so. In fact, even Muthoot Finance is bullish. All of these stocks are bullish, actually.
Okay, all the stocks look bullish. Let's wait and watch if they react further. Siddhartha, Khemka, do you have coverage or reviews on the gold financiers or the gold loan financing, gold loan companies essentially, which use gold as collateral, the Muthoot and the Manappuram, which is a better bet currently?
Yeah, Neeraj, so we cover only one of the two, and we cover Muthoot. But the overall sector has definitely benefited in the last 12 months from the increasing gold prices as well as the stronger demand. However, if you look at the valuations, that has also run up, and at the current valuations we have a neutral rating, but the way the gold prices are going up, I think the momentum in both would continue. for some more time. If you look at the other stock, which is Titan, which generally gets adversely impacted by any rise in the gold prices, as demand for buying or the discretionary spending on gold comes down, which we have seen in the gold data for India as a country as well. That has already impacted the stock, and the stock is come down. But if you see on a much longer horizon, the investment argument in favor of Titan continues, with the company gaining a lot of market share from the unorganized players, the company doing aggressive store expansion, and the same store sales growth also remaining pretty healthy. So that's a stock where a long-term investment can be considered. In the near term, however, the Muthoot and Manappuram should do well.
All right. I think that this doesn't work too well for Titan, because every time we've seen a surge in gold prices, you've seen pressure building up for Titan, demand starting to slump off a bit. But remember, the last time that we saw a few months back, I think between quarter 2 and quarter 3, when the gold prices started to pick up really significantly, that's the time when the management was spoke to us and said that this is slowly start to become the new normal, and then probably the demand will start coming back in. It's probably the volatility in prices, but now it looks like that these elevated prices are here to stay.
Yes, let's wait and watch. By the way, just before we get to all you need to mark that the bank nifty is up nearly 1%, led predominantly by Kotak Bank, which is starting off about 2.5% higher. And this is important because I think the Reserve Bank of India apparently has granted the final approval for the matter of dilution of promoters' stakeholding in the bank. And Aurobindo Pharma is the other one which is active. But since you're minutes away from market open, let's tell you all that you need to know to stay ahead in trade today. First up, the latest nifty rebalancing will see Yes Bank move out of the index on March 27th. Shree Cement will be the replacement.
Saudi Aramco officials are carrying out due diligence in Mumbai as talks with Reliance Industries gather space. People in the know tell Bloomberg.
PTI reports that lenders to Jet Airways have extended their deadline to March 10th after receiving fresh bids of interest.
In key bulk deals, HDFC AMC reduces its stake in Bal Trishna Industries to less than 6% from the earlier 8%.
IT stocks in focus today. Infosys partners with GE Appliances for digital solutions, while HCL Tech launches global delivery center in the US.
And lastly, in key brokerage calls, Morgan Stanley cuts LIC Housing Finance's price target 400 from 440 rupees. Says lack of compliance with RBI norms remains an overhang.
Okay, I want to talk about Aurobindo because that stock is up about 10% in the pre-open session. They've received the ER from USFT with VAI status, Unit 4. VAI is a voluntary action initiated, and apparently it reduces the risk of escalation. Now, this is arguably a very important piece of development for Aurobindo. Siddhartha, Khemka, you have any thoughts here?
Yeah, so this is a sector which has been consistently getting impacted by the US FDA action, especially the likes of Auro Pharma, which has a very good pipeline of A&A pipeline for the products for the US market. And any such move where they are getting a plant approval from US FDA is definitely a big positive for Auro Pharma, as well as for the sectors where some of the other companies were facing the kind of heat from US FDA. So definitely a positive development for Auro.
Well, and would you be a buyer here, Siddhartha, Khemka, on the back of this news, though it's likely to start off only on an upper circuit?
So the stock has been under pressure, and I think if the stock opens up 10% higher, one definitely needs to wait for it to cool down. But I think if the plant approval follows, then there could be a much more upside to the stock even from these levels.
Okay. Well, thanks so much, Siddhartha, for that piece of information as well. Shrikant, very quickly before we get into the top call, Kotak Bank. I don't think you can talk on Kotak Bank. Abhijit, Phatak, can I ask you? It's starting off higher. Would you be a buyer here?
Sorry, in Auro Pharma?
Kotak Bank.
Yeah, Kotak Bank has a resistance near 1730, 1740. If it opens above that, then yes, it will be a buy.
Okay, that's Kotak Bank. What about your top call, Shrikant?
I think, see, apart from this Axis Bank and other stocks, I think we need to focus also on a few other bank stocks like State Bank, which is opening around 322, because there also we feel that the stock has formed reversal formation, and this can go to the levels of 330, 335. So State Bank is also a buy at current level.
Okay, Abhijit, Phatak, your top call, quickly, 10 seconds.
I would go for Tata Steel, which has corrected quite a lot, and it can move towards 550 now, and with a stop loss below yesterday's low, and that should be the good mover in the next few days.
Okay, Siddhartha, Khemka, we'll let you go on that note. Thanks so much for that. Abhijit, thanks for joining in as well. Shrikant, stay on. We'll just take in some opening thoughts from you. But the Nifty 50 starting off on a good note, really. Buoyed by the Asian bourses, the Nifty is up 100 points, 0.91% in trade. Sensex about 370 odd points, and Nifty Bank about 344, nearly up 1%. So strong start for the Indian markets in the session today. Wonder if the mid caps and the small caps are participating. Should come up on your screen. About 1% for the mid cap index. The BSE small cap about 0.5%. So the start is not bad. The question is, can this last? Get the heat map up on the screen. Overwhelming green, I'm sure, except Yes Bank, which is down about 3.5. Not a single other stock which is in the red. That tells you the extent of the bounce. Let's see. I repeat. Let's see if this lasts. But for now, let's talk about stocks which are doing well. I think PSUs are doing very well. There's this chatter about whether the CPSE offerings might come off in the market. I don't know if that is leading this higher, but Coal India, NTPC, State Bank of India, ONGC, they were all up in trade yesterday as well, and in today's session too, they're doing well. Bharti Infra bounces back, by the way, up about 3.5%. I wonder if Vodafone Idea is doing that too. IndusInd Bank is up in the green. HCL Tech is up in the green. So it's a nice mix of stocks. We don't have the heaviest of stocks on the top gainers, but these are doing well. What are heavyweights like HDFC doing? Marginally in the green. Kotak Bank marginally in the green. Bajaj Finance and Axis Bank too doing okay. HDFC Bank too marginally in the green. So except for Bharti and Yes Bank, no other stock in the red. I just want to pull up one stock. Actually, Devina will probably talk about it in detail, but if we can get Aurobindo Pharma on the screen here before we talk about some other stocks, and I wonder if it's starting off as buoyantly, 15% for Aurobindo Pharma, arguably the stock of the morning. We'll try and get an analyst on this as well. But very quickly, other stocks that I want to mark in the session today, essentially companies which are trading at life highs in trade yesterday, the likes of Abbott, Deepak Nitrite, Apollo Hospitals, and all of them start off well. Abbott is on a roll really, another 2.5% higher. And companies which, the gold loan financing companies essentially, let's see if they are moving up higher with gold prices shining iron. Manappuram up about 1.5%. Devina, what are you spotting?
For starters, Shree Cement is up 5% on its entry into the index. Along with that, yesterday's big gains that came into the Network 18, the likes of TV 18, Den Networks, Hathway, all of that continues into today's session as well. So you are seeing TV 18 not so much, but Den and Hathway are doing really well in the session. Both of them are up closer to 7-8% apiece. Vodafone Idea recovers. That's up about 8% after 11% drop yesterday. Suven Life is up 5%. The likes of Markson's Pharma is up. So Pharma as a pocket actually the last few days has not been bad, particularly mid-cap Pharma. Metropolis also had seen a day or two of profit taking, but post that had started moving up again, and today again at 1844 for Metropolis. Aside from that, Indiabulls Real Estate, NBCC, Central Bank of India, Info Edge, these are the names that are doing well. And yesterday's big mover actually, which is IRCTC, should pull that stock up as well to see whether or not the gains have continued. And yes, they have. 1677 now for IRCTC. That's another 2.5% higher this morning. What's losing is Gayatri Projects, which is down 5%. Lakshmi Vilas Bank down 4.4%. The likes of Dabur is down 1.83%. Tata Global, Shriram Transport, these are some of the other losers, but the breadth is clearly positive this morning as we see it, almost 1:5 in favor of the advances. So 200 stocks declining, about 935 stocks which have advanced this morning.
Well, Aurobindo, clearly the stock of the morning, up about 14-15%. The question is the risk reward in favor? And I think that's what will happen. Now we've now kind of, for the benefit of our viewers who might not understand this importance, the Unit 4 is an injectable formulation unit. It's key pending A&E approvals. It's the highest, 47 pending approvals from this plant out of the total of 154. So that's the extent of importance of this for Aurobindo Pharma. And therefore, if all of these start contributing or getting the approvals, then it will only augur very, very well for Aurobindo Pharma. So that's why this stock is doing what it is doing. We've spoken about it just a minute ago, I know, but Shrikant, I just want to get in the charts yet again on this one. 13.24%, 566. Is the breakout worth buying, or is now gone beyond a good purchase price?
So Neeraj, see the way the stock has corrected, and it was like around 440, 430 levels when it was completing its corrective wave. That time also we were of the view that what will come for the stock, and the stock, I think this news is very, very positive for the stock because the stock has already completed its corrective pattern. It was in the correction from the time of 2015 to 2019 almost, and after like spending almost 4 years in that corrective pattern, the stock is now reversing with very strong positive news flow. So I am of the view that the stock is heading higher, and even at this price, if there is a medium to long term view, then one should certainly look for adding long positions, because eventually the stock is going to retrace at least 80% of the entire fall. That comes to somewhere around 850, 900 levels. So it's a buy at this price, but if there is a medium to long term view.
Okay. We leave it at that, gentlemen. Thank you very much for joining, and Abhijit, Phatak, as well as Shrikant. Let's also welcome in Andrew Holland, CEO at Avendus Capital Alternate Strategies. He's joining us right now on the show. Andrew, good morning to you. You know, some green shoots after 4 straight days of selling that we've seen on the index, but that's a very short-term perspective. From a slightly longer-term, medium-term horizon, I mean, you know, coronavirus, that's occupying a lot of mind space right now. Expectation, I mean, if you go back and historically map this to SARS, 7 months of SARS, you know, post which you actually saw some bit of a pickup. You know, we're still hoping for coronavirus to peak out, which has not yet happened. But if it extends itself beyond Q4, what are the implications, downside implications there?
So if it extends itself beyond March, I mean, obviously the situation would have probably worsened from where we are today. And I think globally, you know, the kind of linkages will become quite severe. And obviously you'd have to start looking at reducing, you know, not just earnings forecasts, but GDP forecasts. So I think the range is from the best case scenario. I want to say the best case scenario is that things start to resume to normal and there's a V-shaped recovery. Then it would knock anything from, you know, 0.2 to kind of 0.3 from GDP growth. If it extends onwards and becomes more severe, then, you know, I've seen GDP figures go globally actually halving from where we are today. So, you know, it depends on where you think the virus is going to continue or not, or whether they'll find a vaccine. And I think the problem for the markets is that at the moment we're working on the basis that it's under control. The number of cases has, you know, has started to fall, and recoveries are improving. But of course, all of this data is coming from China, and so no one's really truly believing everything that they see, and that's what's, you know, keeping markets kind of more optimistic that it's all okay. But if it's not, then I don't think the markets globally or locally are factoring in the kind of disruptions you could have across many different industries. It's not just the kind of usual tourism, luxury goods, and travel, so and airlines. So that's where the problem lies, is that we still don't know, and the risk is obviously more to the downside than it is on the upside in terms of news flow.
Andrew, you make a valid point about how unpredictable the extent of damage and the extent of the spread of this would be. Now, two factors, Andrew. If we do not know when this coronavirus issue can come to an end, and therefore we do not know the question is therefore if that is the case, how do you pencil in the economic impact and the supply chain disruption impact that could come in for companies? Because we might well have the virus contained, but earnings of companies which might be affected because of the supply chain might linger on for at least a couple of quarters.
So again, it goes back to the timing of when you're saying that things are starting to recover, right? Because obviously if you're saying that it's contained, then factories will get back to work in China and so forth and so on. And that would be the good news. So I think what the market's saying now is that, you know, even if you take March as kind of a month which will maybe still be a washout, that by the end of March everything will start to recover and you'll get that V-shaped recovery both in kind of what's happening in China, manufacturing, and therefore the supply chain as well. So that's what the market is really banking on. And as an aside to that, if things don't work out, then the more optimistic forecasters will say, well, it's okay because the Federal Reserve and all central banks will reduce interest rates. So there'll be support that we just seen in Singapore, where they're increasing their fiscal deficit to support the overall economy. That you'll see more. So that will be more positive for the markets in the very short term. But again, it depends on when you think timing of this virus will be contained, or there's a vaccine come about, or we're all back to normal. So I think we're another 2 or 3 weeks away from knowing some of those facts. So I think the markets will play on the more optimistic side, obviously, that things are being contained and that will move forward. So the numbers I've seen are quite scary from the kind of disruption if you continue it on, because obviously auto parts is a global factor, and Hyundai have shut their plant in Korea. So it'll have a big impact on a lot of big heavy industries, which is not really being taken into account at the moment.
Mm-hmm. I think the bigger concern now, rather the new concern, is that coronavirus has not just disrupted supply chains. It's hampering demand overall, which was any which way sluggish. So now it's sort of a double whammy coming in on the back of coronavirus with regards to the demand pickup. Andrew, we've seen a whole lot of liquidity being pumped in across the globe. Central banks are very accommodative, and much of that money has found its way into the equity markets. A little bit of hesitance right now on the back of whether or not investments into equity are the way forward, or maybe safer haven assets like gold. What would the call be now in terms of incrementally adding more money into the portfolios from the equity standpoint, be it India, primarily India specific, to get the portfolios spruced up?
Yeah, so I think this is what I was thinking is that I'm going to work on the basis of the base case scenario, or the best case scenario is that the virus will be contained between now and the end of March. If that's the case, then we go back to where we were before at the beginning of the year, which is that global growth will start to pick up, led by the US and Europe and UK, and that would be good for emerging markets and emerging market flows, and India would be a beneficiary of that. So that scenario hasn't gone away from us. I think what you would see is that obviously interest rates would definitely stay lower for longer, both globally and locally. So therefore you would see money moving more towards equities. I think for India, I think maybe the economic recovery, before this virus, we'd be saying, okay, by the end of March, are we seeing better signs, more green shoots, that demand is picking up? Maybe this has just delayed that by an extra month or so. So again, I'd probably stick to the large caps at the moment, the best in terms of each of the sectors, in terms of the stock picking, until you see real evidence that the economy is starting to slowly pick up before looking down at the small and mid caps. I mean, undoubtedly there will be some very good small and mid caps which are are valued very cheaply at the moment. But I think for a broader move for these sectors, then I think you'd need to see signs that the economy is recovering, and I think that's just been delayed by the virus by an extra 1 month or so.
Okay. Andrew, the last time that you were in our studios, you had, this was I think in December, you had spoken about how even if there is an intermediate pullback in the broader markets, you don't know if that will last or no. We've seen that happening now, right? January had that intermediate pullback in mid caps and small caps, which has cooled off now, and the consumption names and the others which are heavily priced are moving higher. Do you think that would continue?
I think in the very short term, yes, because I think, as I said, I think we want growth with safety, and that's what you're getting in the kind of the larger consumption stocks, but also companies or banks within a sector which are continuing to take market share against the weaker competitors. So that's what I mean in terms of the best in class in each of the sector. But you know, I can't bang on the table now and say all these green shoots mean that the economy is going to start recovering. It is going to be a kind of a U-shaped recovery. Anyway, it was always a U-shaped recovery even before the virus. So it's going to be a slow grind, and I think you know, investors will probably want to see a little bit more evidence that this is that what the budget did, but in particular all the heavy lifting by the RBI is starting to see people going out and spending, companies starting to borrow, and I don't think I have enough evidence to give you at the moment to say that that's really what's happening. So until that I can, then, you know, mid and small caps, you know, whilst yes, it had a good January, it's given quite a lot of that back already this month and underperformed the indices. So I think for the time being, it's probably better to hide in the top quality growth stocks, even though they are expensive, because obviously they will continue to do well, even in a more benign kind of economy at the moment.
Many of those growth stocks, Andrew, are primarily, pocketed either in the financial space, in the BFSI space, or in the consumption space. The ones with the extremely stretched valuations. These are probably the primary two pockets to look at. Do you feel there's anything outside the scope of these two segments that one can look at being, even if you have to be slightly picky and choosy about the kind of names you invest in, but, there is a larger universe out there?
Yeah, so I mean, you know, we'd become more constructive on telecom, you know, a number of years back, but more recently on pharma, where, you know, we think the worst is, or the worst was over. But obviously, that thesis is fraught with the fact that, you know, if this virus continues in China, then there could be disruptions to the pharma companies, and that would have an impact on their earnings, which would be a dampener in the very short term. But I think pharma is a sector now which is getting through some of the problems, which have haunted it for years, particularly in manufacturing and regulation. So I think a lot of that's priced in. So if the virus goes away, then I think you'll find that the pharma companies would be one sector which I think will deserve a lot more attention, and probably will see a lot more investors moving towards the sector, because it's looking reasonably valued at this time, given all the problems we've had in the past. I think it could be a sector which could re-rate. But I say we had that short-term kind of worry about supply of products, which would obviously have an impact on the ability to kind of produce the products that they have. So that's the only short-term negative I can see at the moment.
Andrew, it's a small space, but I wonder whether large money bags are now talking about it actively, and that specialty chemicals somehow has seen a flurry of good results and some fairly high HNI activity. What is it that a large company or a large fund like yours thinks about when it looks at that space?
Yeah, it's not a space that we've really kind of been looking at, because we tend to look at the largest companies, and they don't really kind of fall into it. I think a lot of it's linked to what's happening in China, and again, I think that if this continues, then there could be disruption in the chemical sector as well. So it's not a sector I know well, so I can't really comment in great detail. But it's not on our radar. It's more of, kind of small and mid cap in terms of the stocks to our mind.
Yesterday we were speaking to one sell side head of research, Andrew, and their opinion was, as also the companies in the insurance space having said, that this whole changes that we've seen will not really impact earnings too much. However, we have seen prices come off. Are you constructive on the pocket, and maybe not from an immediate term, but from a slightly longer term perspective, or do you think there are better bets to take as opposed to maybe life insurance?
Yeah, insurance is, again, is a growing sector. So it's all about valuations. Valuations have been rich. So it's an opportunity that we're looking at, but it's nothing that we've been investing in the recent past. So it's a sector I think has great long-term growth potential, but again, I think valuations are a little bit stretched, in the medium term for our liking right now. So we'd have to see a little bit more correction before it gets back onto our radar. But as a long-term view, we like this sector.
Okay, I just want to put up Irctc. I think that's at 1700 now. So that stock's along with the entire theme of digitization and tapping in consumers through the digital route, be it the likes of an Affle, which also was a recent listing. IndiaMart Intermesh post its listing had a spectacular run. Affle is now above 2,000, approaching 2,100, and IndiaMart Intermesh is in its league of its own. So that's approaching 2,500 now. Andrew, is this a theme that works well? Even though now, again, when you're talking about those valuations being stretched, they are stretched, but do you have that kind of growth visibility for some of these companies to say that, you're going to see a CAGR of 10 to 15% here, and therefore P multiples on a discounted cash flow basis from a 5 to 6 year period, if you extend these kind of earnings, is still looking okay?
On consumer stocks?
These stocks like Affle, IndiaMart, Intermesh, Irctc, more of a digital play.
I must admit I don't look at some of those companies, so I can't really tell you what their earnings are. So, sorry.
Okay, Andrew, there's just one follow-up to that. Some of these businesses are nascent in India. They might actually grow big. Do you fear losing out on some of these because you, by virtue of your size, wouldn't necessarily have to look at only the larger ones?
You see, it all depends on what you're thinking in terms of the company. So, if it's a mid-cap company now becomes a large cap or falls into our radar, then we'll obviously look at it then to see what the kind of growth rates could still be. But it doesn't necessarily mean because it's become we've missed out. Yes, you might have missed out from moving from a small cap to a large cap. It doesn't mean that large caps can't grow themselves. All you have to think about is really kind of Apple or any other company in the US which have done well. You've made lots of money as a large cap. So I don't worry so much about that part of it because it's not part of our fund strategy to do that. So I'm not trying to compete in small and mid caps with the strategies that we have. So yes, from a personal viewpoint, it's always nice to have those stocks, but from a fund viewpoint, we're not looking at those kind of companies.
Fair point. Yeah, as long as the larger ones are doing well. But Andrew Holland, take a moment to thank you for joining in today and giving us your thoughts. Really appreciate your time.
Pleasure.
The markets have cooled off a little bit from the highs of the day, but still in the green. We take a break, come back, discuss the consumption trends in the food and beverages space with Sodhi of Amul, and talk about the supply chain concerns in China with Vinati, Saraf, Mutreja of Vinati Organics.